Here on the Transparent FX Academy, every day I share my best market breakdowns, showing you guys how you have to analyze the market both from a technical and in order flow perspective to see where you can be looking for the next potential opportunities in the forex market. So without further ado, let's go straight to the charts and see which is today's pair. In today's video, I'm going to speak about gold. Now, why do I want to speak about gold? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete top-down educational analysis, starting from the higher time frames, then going down on the lower ones. We will also check what we have from a COT perspective. So basically commitment of traders, which is what the non-commercials and the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on gold. Now, starting from the monthly time frame, what do we see? Now, here in the monthly, we can see how the market has just created a strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that we have a market which first tested the 50% of the Fibonacci taken on the impulse leg, then went down and tested the 0.618, and currently the market is testing and rejecting the 50% of the Fibonacci taken on this monthly impulse. So here in the monthly, everything seems quite bullish, and we can expect the market to provide more continuation to the upside, possibly even for the creation of a higher high. So on the monthly, everything is bullish, and this is quite clear. Going down on the weekly time frame, what do we have? Now here in the weekly, we have a market which had created a very strong impulse to the upside. Now in this impulse, there is one candle which is not related to the move, which is exactly this red candle here. Now when you have an impulse to the upside and in that impulse there is one candle not related to the move, that red candle is a strong demand area if the market is approaching it from above, like we had in this case. And you obviously expect the market to reject a demand zone. That is what you expect when the market is testing demand. And in fact, that is exactly what the market here on gold just did, creating this rejection to the upside. Just a quick thing, make sure that you like and subscribe, and also let me know in the comments the topic that you will like in the next video. Going down on the daily time frame, we can see that in creating this move to the upside, there has been a lot of structure created. In fact, we can see how, for example, the last structure level that the market created was this previous resistance now turned support. And the market has just tested this previous resistance turned support right now with this a candle that the market printed yesterday. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And what we can see is that the market went and tested the zone, which is in between the 0.618 golden ratio and 0.786 of the Fibonacci taken on this daily impulse. So basically a confluence of demand zone that we do expect the market to reject to the upside. So at the moment, monthly, weekly, and daily all indicate for a potential continuation to the upside here on gold. Now, we had spoken about gold in the past after the creation of this M pattern. When the market was around this area, I made a full breakdown explaining all the reasons for which we did expect the market to provide this move to the upside. And by the way, I will link this previous analysis in the description so you can go and check it out for a further reference and more free education. Now, if we go and see what we have from a COT perspective, which is basically what the non-commercials in the market are doing, we can see how lately on gold net positions have been increasing. We went from having 162k net positions up to having 190k net positions, with 4.9k longs getting added with the last report and 3k shorts getting closed. So gold has been getting quite bullish, with longs getting increased from 250k to 275k. So gold is definitely getting quite bullish also from an institutional perspective, with longs getting added with the last two reports and shorts getting closed with the last two reports. So how we will be approaching a potential longing opportunity here on gold with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, those are the best time frames when it comes to the directional aspect of the market. But when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students, inside of here, we will be monitoring price action from a 4-hour perspective and lower, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside, and for the market to provide and create a higher high. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also click the link in the description that brings you to the mentorship program. It's a very complete program. First, you learn all the rules of my rule-based strategies, and then you trade the strategies with me. Every day, I give you a new daily market breakdown showing you how to apply the strategies with the entry, stops, and take profits. And you can also ask questions and get the answers the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.